And welcome back to NinjaTrader Live. I'll be your host, Tom Schneider, CMT with NinjaTrader. And on this segment, we like to feature our NinjaTrader ecosystem partners. This is Traders Workshop. It's one of our original shows. And today we have one of our original guests. Welcome back, Tiru Nagapan. How you doing, Tiru?
Tom, I'm doing very good over here. London is actually is getting a bit more colder right now. I don't know how is it back where you are, but other than that, yeah, totally fine. It's very crazy busy recently. Yeah,
Yeah, I'm sure it's beautiful. I think the Northeast here is kind of like London, it's getting a little chillier at night but the colors are amazing and just kind of that transition between summer and winter and you hope that it lasts longer, right?
absolutely. That's right. Yeah. So now is what autumn, isn't it, over here? It will get
Yeah, yeah.
much more colder. But anyway, all the winter coats are all coming out. So yeah.
Yeah, got to do it. So how you been?
Yeah, I've been all good. I think, as I said, I've been quite busy. We've been doing a lot of in-person events, and that's what Mike was saying that you guys should do something also in maybe next year. That'd be great. But what would be
Oh,
happening? We went to a IX Trader show recently. The whole room was packed out when we
oh,
were doing
great.
our talks. Yeah, we are doing some live trading over there. We've been invited to another one, property investor show as well, because we tell even property investors how to diversify their portfolio. Another thing also that happened also, Tom, is we've been invited to come and write the training program for the Society of Technical Analysis for the automation
Oh,
diploma
wow.
program. Yeah, so that'd be great. That'll be going into next year. So I've got to write out their training program and start teaching their students as well. So yeah, it's a lot going on. Yes.
That's a big deal. I've been to their building. I took a backtesting class back there, boy,
Right,
15
right.
years ago when at another firm, Bloomberg, we were going into the backtesting market and brought some developers over to learn more about backtesting. And that's a great group, the Society of Technical Analysts over there.
Yeah, I must say, and also the caliber of students they get as well, the questions we get from them. Yeah, it's really good. So I'm looking forward to that. I'll be writing the training program for them. And then we also got the annual summit as well for our own traders. We'll be sharing some research updates, me and Gavin, CEO of Trade Guider. So yeah, a lot of things happening as you can see towards the end of the year. Yeah.
That's great. So, Master of the Markets, can you tell me just a little bit about what will our topic today and how Master of the Markets kind of fits in there?
So for today, I think I just want to progress on to, what we looked at in terms of market movement, cycles, and how we can actually combine what we have learned in terms of multiple time frame analysis. So I thought maybe that would be a good one to do. In terms of
Excellent.
master the markets, just quick overview. I think most people know by now because we've been here on quite a few times, but we've been going on since 2010, 38, 40 years of cumulative experience, spoken in a lot of places, done live trading seminars, coached over 20,000 people, three continents. So yeah, quite a bit of experience behind us, Tom. Yeah.
Yeah, love it. Love it. So, yeah, let's talk about, kind of last time we were talking about the structure, market structure, right? And understanding market structure and where we are in the market structure and what phase we're in and probabilities. I just, it kind of speaks to me when I see your not just your charts, but your spreadsheets. I don't like spreadsheets, Tiro. I don't know if you know that, but I like yours because they are uh, really a clear way of looking at historical data and seeing what are the probabilities, right? There's no holy grail here. It's all about probabilities.
I mean, absolutely. That's what I was saying in the last show as well. So let me go on to this goal chart, and I'm quite impressed actually, Tom. You remember almost everything that we spoke about last time, all the probability. You're what, as I always say, you're one of my best students. But
Uh,
let's let's go for this. So I've got a goal chart here on the weekly, and I just want to tell the audience, and think most of you have been following, that whatever we talk and share here is just based on principles, right? So
mhm.
you can apply this to any market. So the principles will be the same. So in a quick summary, I think the guys can look at the previous videos that we have done. I think I have put it over here. our epic one, 3 critical stats that we did. You can definitely go through that as well. Later on, I'll give you all a link that you can go through in terms of videos as well. So let me just go back to here. But in summary of what we have spoken about so far, all the quants did, right? So what they wanted to find out was they wanted to measure swing distance.
Hmm.
Okay, so as to answer one question definitively is that every time I enter a trade, which they call the point of entry, wherever you enter it, they wanted to find out how much move is left on that swing, right? So that was their primary question they wanted to solve. And this started back in the 1960s with the Richard Wyckoff's era. So then they said, okay, to answer this question of how much move is left, they needed to measure a swing distance. How much does it move? What from the bottom to the top? And from there, they wanted to then figure out the average swing distance, right? And then if they could find out average swing distance, let's say, for example, on gold, that was on the weekly chart, let's say that was maybe $100 average swing move, then every time they entered a particular trade, then they would then calculate maybe, you know what, let me go for maybe $50 from there, $100, because that's the average that it moves. So that was the whole premise of that in a summary, what we've covered so far. If they want to go in detail, they can always go through the other videos. So based on that, and that's when we showed all the open equity data table, the open profit table, and all of this, something like this, that some of the viewers will be familiar with. So coming back into today, now how do I put all this together? And then I'll touch on the points again. So that's the first part. So markets move in swings and markets move in cycles. So based on that, then we created the market structure. So some of you who have been listening in, or even for the first time, you might think, okay, Tiru, okay, I want to find the average swing distance, but then how do I quantify that bottom and top? Because I need a structure. So that's what they went to go and do next. So they went to go and quantify what a bottom and a top is, which is what we got here, the orange arrow and the blue arrow, right? And then with the blue dot. So the blue dot is where the confirmation comes for that bottom. So from at that point, all I'm saying is that, so for example, in this diagram here, the bottom, let's say, gets confirmed, where I'm drawing the cross, which is for a bottom is a blue dot. That's what we call the confirmation bar, right? And then that's where you can consider to take a trade, a point of entry. So from that point of entry, based on your open equity tables, then we can measure, then we can look at where we want to exit or whether we want to let it run and get out at the opposite confirmation bar. So that is how you actually apply this based on cycles and market structure and the importance of market structure. Market structure is talked a lot about back in the 1970s, 80s, and also institutions talk a lot about that.
Mm-hmm.
Why we need the market structure is so that we can get the stats that are valid and has got a higher chance of reproducing itself. Okay.
So Tiro, a couple things. Market structure for me is just a fancy way of saying this market moves in waves, right?
Right.
And it's a way for, like you said, the quants, the institutions who hire those quants or hire analysts to say, this is where the peak is, this is where the trough is, whatever you want to call them, swing points. And so when we hear market structure, it seems really formal, but really it's just a kind of an institution way of saying the market moves in waves, and we're trying to identify those troughs and peaks. And it's not enough to just say, okay, here's a peak and a trough, because as it's happening, that trough or that peak might change. And that's where the confirmation comes in. Yeah, okay, we identified kind of the peak, and it's okay to confirm it after, because we're not trying to buy the lows or sell the highs here. We're just trying to identify these markers so that when we do have an action, we can use those probability tables. Correct?
Absolutely. I think you summarized it really very well,
Okay.
Les, as always. Right.
Okay.
Okay, so that's what we exactly want to do over there. And the reason why they wanted to quantify it, because as you and I know, Tom, in real time, as you said, if you want to use subjectivity, then you get a bit doubtful, especially when you go to lower time frames, right? The noise increases, isn't it? Right?
Right.
So then you don't know. Then if you haven't quantified it, you might then start to guess. Oh, some people might say, oh, that's a bottom. No, 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 I don't agree. That's not a bottom yet because the bottom was really here. Some people
Mhm.
might say, no, that's already a top. So all the confusion starts to begin. So that's why they quantified it, also so that once you've quantified what your bottom and top is, which you've then defined market structure or your wave structure, like you say, then all the stats that you're seeing there, which we've covered in the previous videos as well, and we will do it at 7 steps as well, which is all the OE data, how much move is left on a probability basis. So all this starts to become more valid and reproduce as well. Okay. So that's the first part, what we covered. Now, now I move on to the second part. So now, how can we apply all of this? So let's do it in real time right now. How do we apply all of this? So one way through multiple time frame analysis, right, which is what I wanted to cover really today. For example, let's say we started off from the weekly, then move on to the daily, and then let's say 4 hours. So we're just using 3 time frame analysis.
Mhm.
So one of the thing what we do to keep it really simple, and I like simplicity, regardless. I mean, I talk about all the stats, but only one thing why I really like this because it was very systematic, very logical, just like what you're saying right now. So one thing what we can do just based on cycle structure, because we know that the prices does not move in a straight line, they move in cycles or waves, they will naturally make their bottoms and tops. So for example, on gold right now, right? So we can clearly see that on here, yes, it did a small lower low here, a little bit of a compression there. Before then, it started to outburst and take out that high. At that point, it turned into an uptrend, a
Mhm.
higher high, right? Took out that structure there. And then after that, then a little bit of retracements here, but not really a confirmed top according to our market structure, which helps you to ride the move still carrying on up. So you see, one of the things that we take a look at in terms of market structure, if I want to combine the 3 time frames together, the first thing what I look at, the highest time frame, I look for direction and a setup pattern. So one of the directions I can take for now, because this is currently in an uptrend, which is indicated here. So I will be looking to take on a long basis. Okay. The
Mhm.
second thing then I look at the highest time frame is I look for the setup pattern. Now, what do I mean by that? Because Tom, I don't want to be entering right now here so far
Mhm.
from the bottom, which is now you can start to see, how much can it go up further? Is it going to snap back? All of that. And I want to capture it as it's near to a bottom as much as possible. So I will wait for the retracement. And how much of the retracement until the top gets confirmed, which is then I get a orange arrow
Mhm.
with an orange dot, according to our quantified market structure here. Then at that point, what happens is this is what we call our uptrend phase 2, right? Because it's still in an uptrend, the trend is still intact, but it's in retracement, which is the phase 2 part. It's pulling back a little bit, it's taking a breather.
Mhm.
So then this is when I start to get set. If you think about get set, ready, and go, so this is the first part, right?
Yep.
Getting set. So that's my trigger point. So once I get the uptrend phase 2 setup pattern for an uptrend, then what I then do, because my objective then is to capture it before it turns into a phase 1.
Mm.
You see, there's a simpler way of doing it where if you want to just keep to only one time frame, right? Just weekly only, what I can do is I can wait for the phase 1 until I get a blue dot, isn't it?
Yep.
Right? I can wait for the bottom to confirm, then at that point, then it will become a phase 1. But then, of course, then the downside to it is, as we always say, if you want the easy way out, then of course the gain is a bit lesser. But then if you put a bit more effort, then you can get a bit more gain. So the usual question I always get is, Tiru, but by the time I wait for the blue dot, quite a little bit of move has already gone, right? But another way which my mentor usually told me is, okay, one way is to look at, okay, how much move is gone, but another way to look at is how much move is left. Why not capture that? That's one way of looking at it too. So one strategy can be very simple, just based on one time frame. Wait for the phase one blue dot to come, and then just use the open equity data, capture the move left. Another way is, if the real professionals really want to capture really massive big moves, but keep their risk very small, what they do is they wait for the uptrend phase two setup pattern.
Mm-hmm.
Then, rather than waiting for the blue dot to come on that weekly time frame and missing a little bit of that move by the time it confirms, what now they will do is they will go on to the lower time frame, right?
Mm-hmm.
So in this case, we will go on to the daily time frame. And all I'm looking at, the whole rationale is very logical. The whole rationale is that for the weekly bottom, once it confirms, right, a weekly bottom was once a daily bottom.
Mm-hmm.
A daily bottom was once a 4-hour bottom. A 4-hour bottom was once a 1-hour bottom. In other words, our skill as a professional comes down to, if I want to go to the 1 hour and capture that bottom, which is going to become the weekly, right? It's going to hold that price level, right? Over here, this price level that it held over here, let me just get that one there. So this one over here on the low, let me bring the data box window as well. So let me do a bit of juggling act over here. So this low over here that it held was 2351, right? So no matter what time frame I go to, so this is the 2351. So no matter what time frame I go to, if I'm able to select that 1-hour bottom that's going to hold itself to then become the 4-hour, then the daily, then the weekly bottom, that 2351 level will hold. And the best part, when you got market structure defined, which is the first step is tops and bottoms quantified, you can know if you're right if that 1-hour bottom confirms to become a 4-hour bottom is because the 1-hour bottom, which is got the blue dot, which you selected, which you believe that it will come the 4-hour bottom, will then be signified by another blue dot on the 4-hour time frame.
Right.
Right. And then the daily will then appear blue dot and finally the weekly blue dot. So by market structure, when you define it, you will know whether you're getting that ticks of the different time frames. But to select that 1-hour bottom is when we can apply all of this, right, market structure with other indicators on top. So to select the right 1-hour bottom, if the confluence of factors are there, I can use any indicators on it. I can use Fibonacci, I can use stochastic, and that is why one of the main things we use is volume. And that's why we partnered with Trade Guider and Gavin Holmes and his team and all of that to see if that 1-hour bottom is going to hold, right?
So
So
Tiro,
yeah,
just to kind of recap, instead of I'm going to go down to the 1 hour, you might get a confirmation of a new phase at the 1 hour bottom, whereas your 4 hour bottom, it might not have shown up yet. Let's just pretend
correct,
it hasn't, right?
correct.
And then your 1 hour chart continues, and two bars later, you might get a blue dot, right?
Exactly,
And your 4 hour bottom, or your 4 hour chart still hasn't confirmed the bottom
correct.
yet, or maybe it's just confirming,
Hmm.
and you've already gotten a like kind of a green light, so to speak, in the 1 hour, and instead of waiting for the 4 hour to confirm that bottom 2 bars later, which would be 8 hours later, right, a whole working
Hmm.
day,
Hmm. Hmm.
you're in this trade, and of course you've got your stops in, you've got your protective stops, the chart is also telling you, but um, that's kind of the theory behind this, right? You're not waiting for confirmation because you're in a higher time frame.
Absolutely. You nailed it, right? That's why I always say you're one of the best students,
Oh,
always.
yes.
Right? So yeah, you got it. So that's what we are really looking to do. So to apply it in a systematic manner, so we start off with the highest time frame, as I said, right? We start off with the setup, UTP2, and we
Mhm.
believe that the trend will hold and the phase one bottom will begin and the blue dot will appear, right? So based on that premise, I move to my lower time frame. So let me go on to my lower time frame at the moment, right? So let me go on to the daily here, right? All on the premise of the cycle movement, isn't it? Because after the retracement, it holds the trend and it will move back up again. So you see, it's very logical. So the whole market structure follows all the way through in the systematic, logical manner. Now, on the daily, so what do I now do on the daily, right? So on the daily, what I look for is like a price action, a small price action setup. Okay, and the price action setup, what we look for, in fact, the quants are very, very smart. In fact, the first time they told me this, I was blown away, like how simple it is, but we might miss it. So what they used to tell me is, you see, Tiru, you know, if you think about it, the only way that price on a vertical bar chart, and most traders, millions of traders are looking at vertical bar charts, right?
Right.
If you're, whether it's Renko, whether it's any type of chart, Ishinaki charts, whatever it is, they're all vertical. Now, when you're looking at vertical bar charts, they told us that the only way price can go up, right? The only way price can go up is by the first thing it's got to do is by taking out the high of the previous bar. There's no other way,
Mm-hmm.
right? Very simple,
Mm-hmm.
but very subtle. So that's what we do. So for the first step is we look at the weekly time, the highest time frame, we look for the setup pattern, uptrend phase 2. After we got that, then we move down to the daily time frame and we look for a primary setup. The primary is where the next bar takes out the high of the previous bar.
Okay.
And we just got that on the gold, right? If you look, just this bar here took out the high of the previous bar,
Okay.
right? So that's the primary step for the price to move higher. So we call this a primary price action, okay? Because there's no other way for it to give signal that that bottom might hold. The first step is going up, is taking out the previous bar's high. There's no other way.
Yep.
Very smart, but so simple, but so strong, solid concept. Right. Now, that's the second thing. So I look for, after I got the uptrend phase 2 here, so let me write down, down. And then I've got on the daily, then I look for is a primary price action setup. After that, then I'll move on to the 4-hour.
Mm-hmm.
Now, when I move on now to the 4-hour, let me just do that. 240. I only got a few ones here. I was loading up before, but I think it was taking too much time. But it's okay. We can get away with this one. So on the 4-hour, what we then are looking at is that 4-hour bottom, right, got almost confirmed because I only got a few data over here. Let me just manually check it. The 4-hour bottom got confirmed around this point over here, right? So let me just
I wonder
see
if
if
if you right click in the chart, maybe
yeah, I was doing that just now. Is it the
go
data series,
go
is
to
it?
data series and then let's look at how you're loading in data. Days to load is 5, so maybe we go 50.
I was doing that, but then it was taking too long to do it. And
Oh,
then
was it? Oh, okay.
yeah, and all the indicators went off as well.
You could do 10 maybe. You could try 10. Maybe that'll
Yeah,
pull
I
it
was
in.
giving it a go. Yeah, we can give it a go. No
We'll
problems.
see what happens. I
Uh,
hate to sidetrack you like that.
no problems. We can always
Let's
give
see
it a
what
go.
happens.
Um, I think it did load up a little bit, isn't it? Is that right? Yeah,
Yeah,
I think
maybe a
it did.
little
Yeah,
more. Okay.
yeah, yeah. You're right. So I think that's all we need. Yeah, that's good. So here, so what we now got is, so let me just erase that one away. So what we now got is that we got the confirmation bar there, just right down there, right, on
Mm-hmm.
the 4-hour. Yeah. So now to put it into perspective, and I'm just aware of time as well. So there we go. So I will delete this one. Remove. Yes. So I've got the blue line there, and then my stop will be towards the bottom,
Mm-hmm.
right? Yeah. And can I put that in red? Just so that it doesn't matter. Let me just see. Yes, there we go. Great. So now we go. So we got that locked in now. So all the logic of this is that this 4-hour bottom, right, with that
Mhm.
blue dot, with the bottom being there at about 2650, the logic of this is that will that 4-hour bottom sustain itself for it to carry on in its, at the moment, in its phase one trend on the weekly.
Right.
However, for example, let's let the viewers just imagine if it was an uptrend phase two on the weekly, right? If it was, then the question then comes to, okay, will that 4-hour bottom at 2650 hold on itself to then become the daily blue dot and then the weekly blue dot?
Hmm.
Right?
Hmm.
That's the whole premise, and that's where your skill comes in. So actually, to summarize, with market structure, actually, the most of the work is done for you. The real skill now comes in your selection, right? Which of those bottoms are you going to select according to all the knowledge that you've learned so far and to apply on this to see which one is going to run and then going to hold to become and turn that weekly phase two into the phase one. That's what I would say, Tom, on the multiple time frame analysis.
That's really, really good explanation. Like you said, you start higher level, but go down to the granular, because the granular, if you're looking to get a big move, you want to get it at the granular level. And as time goes on, you want to progress to those higher level times, because then it becomes a little more resolute.
Absolutely. It's a concept of ripple, right? It starts as a ripple,
Yes,
right? And right,
yes.
like for servers out there, I'm not a surfer, by the way, but I just thought that I'm not sure if you are, Tom,
No,
but
no. I'd break my neck again.
so if you look before it becomes a wave, right? So it's like a ripple first, then it goes into a wave, and then it becomes the swell, isn't it? That's what
Right.
one of I always thought it was ripple, swell, and wave, but then one surfer corrected me. He said it's a ripple, then it's a wave, then the swell is the biggest one, right?
Okay.
So that's what we're doing. Oh yeah. So the ripple on the 4-hour, and then the daily is going to become the wave, and then the swell is going to become on the weekly. And the beauty of it is, if you can really capture this early, then imagine by the time the blue dot happens on the weekly, you still got open equity, open profit still left,
Right.
based on all the stats tables. So it's crazy how the whole systematic thinking and how it aligns with just cycle movement. So absolutely makes sense.
Love it. Love it. Tira, where can people find you?
Right. So I guess a few things. So if they really want to find out more about us, I would say definitely take a look at the 7 Steps video series. So
Mhm.
7steps to ctp.com. And then when they put their name, email, and number if they want, and they click on the green there, they get the free videos, which is all the 7 videos, 10, 15 minutes each. I highly recommend every trader to watch this. They can use this in any trading strategy or overlay with any other indicators that they got. In fact, after we presented this was very similar to the one we presented in the SDA. And that's when we got invited to come and do their training programs and all that. So it was very well received, 15, 20 years of research that we put onto this. So 7 Steps to CTP, I definitely highly encourage everyone to watch. And then also our YouTube channel as well, so that whenever we go live, people can then come on. We interview really great people over there. Market Visit, Tom Basso, STA Talk is there as well. So yeah, so a lot of things over there. So those are the two things I would say, Tom, YouTube and
Awesome.
the 7 Step CTP.
Well, thanks so much, Tira. It's always great to see you. Say hi to Gavin for us.
Definitely.
Jim's actually out, and Mike and I are running the show for another week after this one. So, Jim's actually bopping around Italy, so he'll be back. But great to see you, and we'll have you back real soon.
All right, definitely.
All
Enjoyed
right.
it. Thank you. Bye.
Thanks so much. And we're going to take a quick break right here. Be back with Mike Burke to wrap up the day.
So, you want to be a trader? Well, you should know you're not alone.